Good evening, everyone. Welcome to the channel. Today I am going to talk about Prada interim report. Do note that this is not a financial advice or a buy or sell call. All content are AI generated and is not associated with anyone. Prada S.p.A. offers a diverse range of businesses and services through its various brands. These include leather goods, footwear, ready-to-wear products under the following brand names: plus Prada, plus Miu Miu, plus churches, plus car, shoe, food sector under Marchesi 1824, brand sailing, races, business under Luna Rossa, brand name eyewear, and fragrances through licensing agreements. The company sells its products through various channels, including owned-operated stores, e-commerce, department stores, independent retailers, and e-tailers. The lack of significant changes in Prada's stock price over the past year can be attributed to a combination of factors. While the company has experienced fluctuations, its overall performance remains stable due to several key influences. One major factor is the brand's performance, particularly that of Miu Miu, which has been driving growth for the Prada Group by appealing to a younger demographic. However, any shifts in this trend or the sustainability of Miu Miu's exceptional growth can impact Prada's valuation and stock price. Global economic conditions also play a significant role, as consumer purchasing power for luxury goods is directly correlated with economic growth. Economic booms can lead to increased sales, while downturns may cause declines. Additionally, market sentiment and valuation, including investor sentiment reflected in price-to-earnings ratios, contribute to the stability of Prada's stock price. Strong earnings performance and a positive future outlook can lead to increased investor willingness to pay more for the stock. The company's financials and outlook are also critical, as analysts' expectations for earnings growth influence investor decisions. Furthermore, economic factors such as supply chain costs and operational expenses impact profitability. Lastly, the political and regulatory environment in key markets affects Prada's sales and profitability through stability, regulations on luxury goods, intellectual property rights enforcement, and taxation policies. The primary drivers of revenue growth or decline for the company can be summarized as follows. Revenue growth drivers. The main contributors to revenue growth are net sales, royalties, and strong performances from specific brands such as Miu Miu. Additionally, successful marketing campaigns, events, and geographic expansion in regions like the Middle East have also contributed to revenue growth. Revenue decline drivers. On the other hand, decline in revenue is attributed to underperformance of the Prada brand, wholesale net sales, and retail net sales for the Prada brand. External factors such as natural disasters, foreign exchange risk, interest rate fluctuations, and regional economic downturns have also negatively impacted revenue. The financial performance of the company underwent significant changes between 2024 and 2025. Despite conflicting statements, it is clear that net income decreased by a substantial 54% from €838,907 in 2024 to €385,883 in 2025. This decline can be attributed to a decrease in net income. On the other hand, profit margins showed mixed results. The gross margin increased slightly from 79.8% in 2024 to 80.1% in 2025, indicating an improvement in profitability. However, operating income, EBIT, and net income as a percentage of net revenues decreased from 22.6% and 15.1%, respectively, in 2024 to 22.2% and 14.1% in 2025. These conflicting trends suggest that the company's financial performance is complex and requires further analysis to understand the underlying causes. The company is indeed generating positive operating cash flow, as evident from its financial summary. The key indicators that support this conclusion are: net operating cash flow for the 6-month period was a significant €467.5 million. Cash flow from operating activities also showed a positive figure of €689,139. Free cash flow, which is a crucial metric in assessing a company's liquidity and profitability, stood at a positive €173,603. These figures collectively demonstrate that the company has been able to generate sufficient cash from its operations, thereby confirming its ability to sustain itself financially. The company's debt level and interest expenses have undergone significant changes in the past year. While total financial expenses increased by 29.6%, interest expenses on lease liabilities rose by 24.2%. The net financial surplus also decreased, indicating a higher debt level. However, there are some areas where the debt has decreased, such as total debt, liabilities, and current liabilities. Additionally, the interest expenses on lease liabilities, as a percentage of net revenues, have increased from -1.3% to -1.5%. Overall, these changes suggest that the company's financial situation is becoming more challenging. Management is expressing a cautious optimism about the company's outlook, citing its strong positioning for future growth. The company's strategy focuses on digital evolution and industrial capabilities, with a notable acquisition expected to close in 2025. Additionally, management emphasizes commitments to sustainability, diversity, equity, and inclusion initiatives. The company has a history of paying dividends to its shareholders. In fact, as stated on page 75, the answer is clearly yes when it comes to dividend payments. Specifically, in the given financial summary, we see that the company paid out a total of euro 419,647,136 in dividends. This indicates a commitment to returning value to investors through regular dividend distributions. Concerns about inventory buildup or supply chain disruption are evident in the financial summary. On page 55, inventory buildup is mentioned due to increased allocations for slow-moving products and raw materials. Additionally, on page 72, an increase in purchases of raw materials and manufacturing services suggests potential inventory buildup. Furthermore, large principal amounts owed by Prada subsidiaries in various countries, USD 579,211, MXN 412,190, BRL 400,000, VND 146,246,570, may indicate supply chain disruption concerns on page 85. The significant increase in inventory levels for Prada Middle East FZCO and Prada Emirates LLC by 25% and 18%, respectively, also raises concerns about inventory buildup. These findings suggest that there are legitimate concerns about inventory buildup or supply chain disruption within the company's operations. That concludes the financial summary for Prada. Feel free to comment below, and I will be happy to answer them when possible.